Imagine a company, okay, not just growing, but really experiencing this sort of explosive expansion. We're talking over 100% year-over-year growth.
Yeah.
And it's not just any sector. This is right in the thick of it, high-stakes, cutting-edge, advanced computing. That company is Netweb Technologies India Limited, and that's exactly what we're going to unpack for you today. So our deep dive, it's based on their Q1 results for FY26. These are the unaudited financials. Plus, we've got their detailed earnings presentation and the notes from their board meeting, all just out on July 31st, 2025. Right, so our mission here is really to pull out the key insights from all this information. We're not just going to read numbers at you. We want to get into the why behind this, well, phenomenal growth. Understand their strategy, where they're positioned, and what this means for you, especially if you're interested in, the intersection of high tech and national strategy. We'll help you grab the main takeaways, maybe some surprising bits, and just the bigger picture. Sound good? Okay, let's dive straight into these headline numbers then, because honestly, they are pretty eye-popping. They really show incredible momentum.
First up, operating income for Q1 FY26. It hit $3,012 million. Now get this, that's a 101.7% jump year over year compared to Q1 of FY25. Just incredible. And it doesn't stop there. Operating EBITDA, that's basically profit from their core business before, the interest, taxes, depreciation stuff, that leaped to $448 million.
Wow.
Yeah, 127.2% increase over the same quarter last year.
That's huge. And a margin improved too, right?
Exactly. That's what's really compelling. The operating EBITDA margin went up to 14.9%.
From 13.2%.
Yep, from 13.2%. So better profitability alongside that massive growth. Then there's profit after tax, PAT. That reached $305 million,
Okay.
which is exactly 100.0% growth year over year. And they kept a strong PAT margin too,
Yeah.
10.1%. And finally, diluted EPS earnings per share. That came in at 5.38 for the quarter,
And compared to last year?
up 99.3% from 2.70 in Q1 FY25. So across the board, just massive increases.
What's really fascinating here, I think, isn't just the sheer size of the growth figures, but how consistent it looks. I mean, across all these key metrics, income, EBITDA, PAT, EPS, it's all roughly doubling. It's not like one big contract skewed just the revenue. And that improved margin you mentioned, that's really telling. In such a competitive field, growing your margin like that suggests it's not just market opportunity, it's also really disciplined execution. Maybe even some pricing power, which points towards, sustainable growth, not just chasing revenue.
That's a great point. Disciplined execution. It makes you ask, okay, what's actually fueling this? What's the engine here? And the source materials are very clear. AI systems, that seems to be the primary driver. Income from their AI division grew by an absolutely astonishing 300.0% year over year in Q1.
300%.
300%. And just to grasp how significant that is, AI systems now make up 29.0% of their entire operating revenue.
Wow, almost a third of the business now from AI.
Exactly. And crucially, a big piece of this AI surge was the successful delivery of a large AI order for the defense sector. The chairman and MD, Mr. Sanjay Lodha, he put it quite powerfully. He said, we firmly believe that a country's defense strength in today's world is not just defined by its military firepower alone, but increasingly by its technological superiority.
That connects a lot of dots. If you look at the bigger picture, this performance, it's way more than just riding the AI wave. That 300% growth, especially landing a big defense contract, suggests they've really figured out how to deliver complex, high-stakes AI solutions.
Right. Within India specifically.
Exactly. Within the Indian context, especially defense, which has, unique requirements, this could give them a real first-mover advantage. It builds a kind of competitive moat. And it ties perfectly into the Make in India initiative. It's not just assembling things locally, it's about developing and delivering high-tech strategic capabilities, which helps position India as a tech hub, particularly with the government pushing for indigenous LLMs and AI development.
So, with that strategic angle in mind, what does this mean for their actual business, their products, their customers? Well, Netweb positions itself as India's leading Indian origin, owned and controlled OEM original equipment manufacturer in high-end computing solutions, HCS. They basically offer the whole stack, products, solutions. Their big three growth pillars are high-performance computing, HPC, private cloud, and of course, AI systems.
But they do more than just those three, right?
Oh yeah, absolutely. Their portfolio includes hyper-converged infrastructure, HCI AI systems, enterprise workstations, high-performance storage, data center servers, plus all the software and services that go with it. So for you, the customer, they're aiming to be a one-stop shop for this high-end stuff. And if we look at who their customers are, By industry for Q1,
Mm.
it's quite a mix, but strategically focused. IT and IT-enabled services, that's the biggest slice, 37% of revenue.
Okay.
Then space and defense, critical sectors, account for 28%.
Significant.
Very. Higher education and research is 17%, and then various other enterprises make up the last 18%. But here's something really striking. Customer loyalty.
Ah, yes.
Get this, 72.7% of their revenue in Q1 came from repeat customers.
That's incredibly high for this industry.
Isn't it? They mentioned having 137 repeat customers they've worked with for over 5.5 years on average. That's real stickiness.
It suggests deep partnerships, not just selling boxes.
Absolutely. But at the same time, they're not just relying on old relationships. They also brought on 23 new clients in Q1.
So expanding their reach, too.
Yeah, across different industries. Shows they're still penetrating the market effectively.
That combination is fascinating. How do they pull that off? Deep loyalty and new growth. I think their secret sauce, maybe, is how they balance these global tech partnerships. Working with the big names like Intel, AMD, NVIDIA, Seagate, Samsung, while also developing their own homegrown tech and really leaning into national policies like Make in India and the PLI schemes.
The dual approach. Global tech, local innovation.
Precisely. It gives them a unique edge, I think. Access to the latest global stuff, but also the ability to customize, control, and align with national priorities.
And it seems like they're really sharpening that edge for the future.
Yeah.
So looking ahead, how are they positioning themselves to stay leaders? Well, they've flagged some key innovations. First, there's Skyless.ai, which they launched back in FY25. They describe it as a unified composable GPU orchestration platform.
Okay, break that down. What does that mean in practice?
Think of it like a smart control system for all their powerful AI hardware, the GPUs. Skyless.ai helps clients set up and manage their AI infrastructure much faster, making sure all those expensive GPUs are working together efficiently, optimizing things.
So it makes complex AI easier to deploy and run.
Exactly. And they explicitly tie it to India's vision of becoming the AI factory of the world, so it's a strategic software play too. Then there's the OEM partnership with NVIDIA. This is a big one.
On the Blackwell platform.
Yes, the cutting-edge Blackwell platform. They've got a roadmap to design and develop AI GPU systems based on it.
So they're not just buying and selling NVIDIA chips, they're co-developing systems using the absolute latest tech.
Right. That puts them right at the frontier globally. Huge deal. And on the manufacturing side, they commissioned that new facility with surface mount technology, SMT, back in May 2024.
SMT is crucial for building complex, dense circuit boards needed for these advanced systems. Gives them more control, better capability.
Definitely. Plus, they've launched Make in India servers using the latest Intel Emerald Rapids and AMD Turin chips. And they're even branching out into new product lines, like network switches. So expanding the portfolio.
Lots of activity on the innovation front.
For sure. And when you look at their future opportunities, the pipeline looks really strong. They've got an order book of nearly $2,300 million.
Solid.
Plus, L1 bids, meaning bids they've basically won worth another $4,640 million.
So that's future revenue pretty much locked in.
Yeah. And then there's the pipeline of potential deals, which is massive.
Okay.
Over 41,000 million. So strong visibility.
And the market trends support this too, right? Generative AI, LLMs.
Absolutely. Big investments happening there, both government and enterprise, especially for these indigenous Indian LLMs. Plus, the huge demand for private cloud and just massive compute power for all the new data centers popping up across India.
And they're looking beyond India too.
They are. Plans for geographic expansion into Europe and the Middle East, starting with setting up service networks in 4 countries initially.
Okay, so the strategic moves really back up the growth story. Embracing Blackwell, the SMT facility, Skyless.ai, international plans. It shows they're not just riding the current wave, they're actively building for the next one. They're focused on things like on-prem AI, sovereign cloud, container platforms. It shows they really understand where the market is heading, especially around data security and control. It definitely solidifies their competitive position.
Right. And now, beyond all the growth and strategy, what about the underlying financial health? Stability, efficiency. Well, the balance sheet looks remarkably strong. Get this. Net debt as of June 2025 was actually negative $475.2 million.
So net cash position, no debt worries there.
Exactly. They're sitting on cash, not debt.
Mm-hmm.
Cash and cash equivalents were $616.5 million.
Healthy cushion.
Very healthy. And the efficiency metrics look great too. Return on equity, ROE, was 22.4%. And return on capital employed, ROCE, was 30.6%. This is annualized data as of June.
Those are strong returns. Shows they're using their capital very effectively to generate profits. Vital for a high-growth company.
Definitely. And quickly on the corporate governance side, the board obviously approved these financials. They also announced a final dividend for the last financial year, FY25.
Good news for shareholders.
Yes.
Well,
The record date is set for August 22nd, 2025. And payment should happen by September 29th, assuming shareholders approve it at the AGM. Speaking of which, the 26th Annual General Meeting is scheduled for Saturday, August 30th, 2025. It'll be virtual VC or other audiovisual means.
standard practice now.
Pretty much. E-voting details are out there for shareholders.
Yeah.
And the share transfer books will be closed from August 23rd to the 30th. Oh, and one final note, they did change their inventory valuation method from FIFO to a moving weighted average cost.
Any major impact from that?
Apparently not. The auditors did a limited review and confirmed the impact was not material. So more of a technical accounting change, doesn't really alter the big picture financially.
Okay, good to know. So overall, the financials really back everything up. Strong balance sheet, good cash flow, efficient use of capital. It provides a really solid foundation for all these ambitious growth plans we've been talking about. And the clear communication on dividends, the AGM, it signals good transparency and a focus on shareholder value, too. Paints a picture of solid governance behind the impressive numbers.
Yeah, absolutely. So just to wrap things up quickly, Netweb Technologies' Q1 performance. It's a story of, well, explosive growth, clearly driven by a smart focus on AI, particularly in critical sectors like defense. But it's not just luck. It's backed by real innovation. Skyless.ai, the Blackwell partnership, manufacturing upgrades, plus robust financial health, and that strong Make in India alignment.
A very compelling picture overall.
Definitely. Which leads us to a final thought for you, our listeners. As India keeps pushing hard for tech self-reliance, positioning itself as a global AI hub, how might companies like Netweb, with these integrated design and manufacturing capabilities right here in India, start to fundamentally reshape global tech supply chains? And maybe even more interestingly, what kind of unexpected innovations could bottle up from this intense focus on building high-end computing solutions indigenously? Something to think about.